No. And maybe some of the companies, the foreign companies like Apple, who seem to pay strangely little tax in New Zealand, could pay more of it.
Well, if you can get it out of them, go for it.
Well handled, Nona.
Yes, there you go.
What are we talking about tonight? The US markets?
yeah.
Boy, they've had a strange old week.
Well, we've just heard, just as Katrina said at the end there, the debt levels in the United States are an issue. We've seen very strong economic growth in the United States. That's fueled by a number of measures which Donald Trump's administration has brought in. This all started, I guess, about a week ago with very strong employment numbers. That was the labor market data of the United States, which gave the suggestion that interest rates might have to rise because the economy was hotter than people thought. And then we had some issues with the debt level that was causing all sorts of political unsettling.
Yeah.
And that's
a big issue there, isn't it?
It is a really big issue. I mean, if you're thinking about it, you've got a situation where there's been tax cuts introduced. At the same time, debt is increasing.
And they want to raise the debt ceiling.
Yeah, and the debt ceiling. And those things can be addressed through just some political measures, but there's a lot of disagreement there. We've just seen the debate will go on. And that unsettles the market. But underlying all of that are the long-term interest rates. And the yield there on the benchmark 10-year U.S. government bond is at a 4-year high. And so this
off a low base.
Yes.
It got us as low as 1.5, didn't it?
Yeah,
1.5%.
well, it's been very, very low.
Yeah.
And the other thing is, we've got a change in the chair of the U.S. Federal Reserve. So there's a lot of things happening. What's going to happen is that the U.S. Federal Reserve, the new governor, he'll have to spend some time trying to settle the market. But so far, people are calling this a correction. So no need to panic, right?
Yeah, although the commentators, the people who get asked their opinion on this stuff, specialise in wishful thinking too, don't they? I mean, there's no one who's getting asked their opinion on this stuff who's talking the market down. I mean, it's a convenient narrative to run it as a correction. If we look at inflationary pressures, if we look at rising interest rates, if we look at US debt, and if we look at political stalemates, there's plenty of reasons that the share market would have the jitters.
Well, sure, but don't forget that a lot of that money from the equities market is being shifted into those long-term savings, these interest rates, long-term interest rates, very good for people who are wanting to retire. A lot of money, pension money, went into equities, which are high risk, relatively speaking. And that money needs to shift back into what was traditionally the place where people used to put their money, was like a little bit not quite as safe as your mattress, perhaps, but that was the idea. But with interest rates so low for so long, people shifted that money into equities, which is higher risk anyway.
Yeah.
So now it's shifting back. We'll see what happens. And I don't think that is going to end. We're seeing this going right through the market. We've seen it's happening in Asia. We expect it to continue in Europe and also in the United States. And of course, the market doesn't close there.
You've been speaking to someone, have you? And I've got their name here, so I'm passing it across to you if you're watching this on the TV.
Mark Fowler, that's right, at Helpson Wealth Partners.
I was there on Wednesday.
Oh.
Just to see what the market did. I've never seen a calmer group of people.
It's a little different than it used to be. So anyways, look, we had Mark Fowler earlier today, and he said that we can expect to see more. We've already said that. And Wall Street is going to be closing in a few hours tomorrow morning in New York. And here's what Mark Fowler had to say.
Fair to say it's broad-based and across the board we're got to see of red numbers. We saw it earlier in the week. We had quite a dramatic sort of down day on the Dow Jones in the US, and it sort of bounced back fairly quickly. But obviously we've sort of seen a repeat of that into the close today. So our market's clearly closed tomorrow, but we're interesting to see what happens in offshore markets overnight.
And that's Mark Fowler there at Helpson Wealth Partners.
What stocks outperformed the market today?
Well, actually, about basically a few leaders did, and one of the ones that did was Sky City. They reported their first half result today, and it was pretty good. They made, their net profit for the 6 months ended December was up nearly 12% to $93.5 million, and that's I spoke with the chief executive there, Graham Stevens, and he called that a modest improvement, but really it's a record one, and he said he's not very big on records, but it was pretty darn good. And their normalized net profit was also pretty nice. It was up 8%, and that's their sort of win rate for those international high rollers, which is a really important part of their business. Not all of it, but it's significant. Look, that part of the business is expected to pick up with the Chinese New Year. which is just around the corner. We got the year of the dog coming up. So they outperformed the market. They finished up 0.5%. That's a 2-cent gain, $4.05. And the rest of the leaders were only down just a little bit. So pretty much we escaped the big hit that others have seen, like the United States, which was down 4%. We fell just over 1%. That's the NZX Top 50, 85 points to 8,092. And our dollar is steady. 72.1 US cents, 92.7 Australian, and 51.7 pence.
Nona Pelletier, have a great weekend. Thanks, Nona. Really appreciate it.